Today you're at £10 million, £9.5, £10 million market cap. And at the same time, the share price over the last 3 years is down, 70 odd %. It's, you presided over a period of a tough market. Help your shareholders who are, much underwater understand the timing of when you think this thing starts looking like it's going to get into production, because that that helps sentiment, and when you think it's going to start actually generating cash, which will definitely help sentiment. Where's the confidence come from that you think Mako is going to be the making of the business? Hello and welcome to Crux Investor. First of all, thank you very much for watching this video. If you enjoy it, please give us a thumbs up. And if you could also leave us a comment below, we'll try to get back to absolutely everyone. And for those of you who have not already done so, please click the subscription button in the corner of the screen. And if you want to see more videos like this, click the notification bell. So today we spoke with James Menzies, who is the CEO of Coro Energy, a London-listed oil and gas explorer with hopes and plans for the Southeast Asia region. Now, they've had some false dawns and they are now honing in on a couple of targets in Malaysia and Indonesia, and we discuss those with James today. Take a look in the description below, click on the relevant timestamps against each of those topics. That'll take you to that part of the video. Anyway, let's hear what James had to say. Hello, James. How are you, sir?
Very well. Thank you for having me.
Well, no, thanks for coming on the show. We like an oil and gas story. Used to be involved in that space. And we're now going to do a few more interviews with oil and gas companies. So you're in Indonesia, Southeast Asia. Why don't you give us a 1-minute overview of what you're up to, and then we'll pick it up from there.
Yes, certainly. Yeah. Coro Energy, we are focused exclusively on Southeast Asia and currently have assets in Indonesia, as you mentioned, and we have a study going on in Malaysia. We're trying to grow there. My background is as a geophysicist and a geologist. I spent most of my career in the London and Scottish Marine Oil, LSE, which was an independent working internationally. A lot of my time in Vietnam and Indonesia with those guys. And then I went into corporate finance when that got acquired by E&I. And as a result of that, I set up a company called Salamander, which we listed in the UK. We sold it to Ophir Energy in 2014, 2015. And now I'm with Coro since May of 2018 and helping them establish and grow a business in that region. So Coro today has a very small production business in Italy. But actually, the story is all around Southeast Asia, as you say.
Okay, brilliant. Thanks for the summary. We'll get into some of the detail now. If you don't mind, I want to start with the business plan, the thought. What was going on up here when you started this? What did you set out to do? As you say, you came off the back of success at Salamander, but that was a big company. This is a smaller, more humble beginning, I'm sure. So what did you think you were going to do, and how did you think you were going to go about delivering it?
Yes, great question. I have to remind you, Salamander wasn't a big company when we started it around the kitchen table. In fact, it was a lot smaller than this. So this is very familiar to me, this kind of evolution. And I think it's something you have to accept. If you're going to do this, start small and grow big, you just have to be prepared to live through that. To be honest, when we started Salamander, I'm not going to bang on about Salamander a lot, but there was an important learning there. When we started that, it was a different time. It was a time when lots of capital was available. Oil and gas was very much in fashion. Investors wanted in. And really our mantra was emerging markets, Southeast Asia, and E&P. And if you like those two things, you'll love Salamander. Today, that doesn't really wash. And what we learned through that whole Salamander exercise was what works well in Southeast Asia and what doesn't. Now, when I arrived in Coro, and the founders of Coro, the backers of the board at the time, asked me to help them, they are very much more exploration-led people. And their thinking was all around exploration. Actually, my experience in Southeast Asia has told me exploration is a real losing streak. We had not good experience in Salamander, and Actually, not very, very, very few. I can't. In fact, I'm struggling to think of any small cap, mid cap companies that were successful explorers in Southeast Asia. It's got a great exploration track record, particularly recently, but that's with big companies who have got big, deep pockets and long time horizons, who are drilling deep water, looking for big gas. It's not our game. What I was able to do was convince the board that actually the game that works well in Southeast Asia is picking up small fields that others haven't bothered with because of their size. And typically when you look at the companies investing across the space, and I need to come back to that because there's a big change going on there. They have developed large fields, and anything that's 50 million barrels, 100 million barrels or less, they're just not interested. And particularly small pockets of gas, the same. Mm-hmm. And what we see is a lot of those around. So what I'd call greenfield fallow discoveries, which small companies can pick up, absolutely will work at this price environment and this cost environment and under the contract terms in the region. And that has been yielding fantastic returns. There's numerous success stories there. And building a portfolio of those and managing that has been a real winning game. So we're not breaking new ground, but that is a well-trodden path, and that's the route I want Coro to go.
Okay, so just so I'm clear, so you were talking about these fallow fields, which are greenfield. They're not producing, but there's enough data to tell you that you could get into production reasonably quickly and economically, and then do a step-out program from there. That's your model.
Correct. So I think there's a greenfield model, which is exactly as you say. So it can be in production. I don't mind if it isn't, or it can be. In fact, in some ways it helps if it is. But commercializing that resource and step out exploration, the next fault block or the next bump along, fantastic. Those results work really well. But don't go wildcatting in the middle of a basin, where no one has drilled within 100 kilometers. That's just a disaster. So that's the greenfield model. But actually, what we're seeing in Southeast Asia right now is a big change in the ownership structure of assets. And that means a lot of brownfield opportunities are coming. And so you have to be open-minded to pick up brownfield projects, which are generally quite mature producing assets. Mm-hmm. What I see the advantage there is you can take those, of course we can lower costs and extend field life and extend the contract terms, et cetera, but actually recycling that free cash flow into these small greenfields is going to be a fantastic model.
Okay, so that's the theory of the model, and we'll come on to talk about your assets in a second. You've mentioned a few times there the board, the team, etc. So let's get into some of the people and names associated with this. Obviously, you've given us a bit of background about yourself. Great. You've also got James Parsons on there. Sound Energy and Echo Energy, big name. You got Fiona and Marco as well, but let's start with James. So is he just a name on there? Is he active? What's he actually do on a day-to-day basis?
Well, he's a non-executive, right? So to emphasise that, and I think he'd be the first to say that this isn't a team that needs a lot of hand-holding. I think I'd also point out that Southeast Asia isn't James's speciality, and he would readily admit that. So I think in terms of knowing the companies, the national companies, the regulators, how things are done, what they expect, that's not really James's area. That's very much mine and the team I use down in Southeast Asia. That's what we know very well.
So why is he there? Why is he there?
He and Marco obviously instrumental in starting this business. They raised the capital. It was their concept. Same with Echo. So I think obviously we've all seen Sound's issues and what's happened there. But without people like James in this industry, it does need entrepreneurs to come out and kickstart things. Where this may end up may not be what they thought it would be, but a lot of entrepreneurial work is you don't know where it's going to go. You start things off and let's see where it gets to. And actually that is James and Marco's very, very strong point, is that they're willing to take risks and get these things off the ground. What happens to them thereafter? Let's see.
Okay, so I noticed one of the other names you got on there, someone I know from back around Ophir days in 2013, 14, 15, was Nick Cooper. what's his involvement in this? I know he's an independent, but what's he actually doing here?
Yes. Why is he here, Nick? I think what that speaks to, obviously Nick's someone I've known a long time. He worked with me in Salamander. He was the CFO. I was the CEO. And he was a co-founder of the company with me. So he's also lived through this evolution of, working in relatively modest surroundings and growing a business. And he's a guy who's prepared to roll his sleeves up. Again, he's a non-exec, so he's not in here day to day doing things. But I think what Nick brings, it's backup for me in terms of he understands what I'm doing in Southeast Asia. He's done it himself. He's completely okay with all of that. Also, I think given that, and I was saying earlier that the transformation for Coro, we come back to this, but is all about this change of ownership of assets in Southeast Asia. Nick is a guy who's also built with me in Salamander a company with these assets, and he's ran a company in Ophir that has had big asset positions, big portfolios, dealt with big institutions, national companies, regulators. And I think he speaks to that element of our strategy. I think James and Mark are very much the start of this, the incipient piece that gets the seed going and starts it growing. But you need people like Nick who understand where this needs to go and how it needs to act.
Okay. So how does this work with regard? You're 10 million market, 9 million, 10 million market cap pounds. Small company, and the sum of the parts needs to make you look bigger than you are to be able to have conversations out there, despite whatever your track record is. Okay, so are these people paid consultants? How do you remunerate everyone? How does that work? Or are they just advisory for now, and we'll see how it goes? How does it work?
So I don't know. It might be two things you're asking me there. I'm being a bit confused. Let's deal with you're only a micro cap. How do you have conversations? Question. Okay. Actually, it doesn't really matter what the size of your market cap is. We know, particularly the people in Malaysia and in Indonesia, we know everyone in the industry, all the service providers. It is a relatively small world out there, and once you're, as you're part of that club, you know everything that's going on. So it doesn't matter if I had no cap behind me, I could still have those conversations. Moving on to the people, we have a very small team here in London. There's only 4 people in this office. One of them's a PA. So we're running very lean. We have a team on the ground in Southeast Asia that we pull in for evaluation work, principally. And so they're not employees. We do bring them, but the same people. It's a constant, that technical resource is the same people that we use time and time again. So we're not chopping and changing, that element. I think, in growing a company, there are 3 things you're always worried about. It's the deal, the capital, and the people. And you spin these plates, and you have to get them landed in the right order. There's no point in hiring a big team if you haven't got the capital or the deal. So there is a little bit of a circle there you've got to break into and get it right. At the moment, we can chase deals. That doesn't cost anything, really, and it's a bit of G&A, that's it. When you land a deal, and you have to have the people who are prepared to come with you to evaluate these things and who you are going to hire should you be successful.
Okay.
But when you're looking at a deal, of course, getting on the right side of it and getting negotiating with the counterparty and them being prepared to deal with you is a challenge. But the biggest challenge, and that's the number one challenge right now. The next challenge is going to be how do we finance it sensibly and creatively? Because what we see is our share register isn't necessarily one. We're not going to turn around to people and expect them to stump up, tens of millions of dollars for something. Clearly, that isn't going to be possible. So we have to be creative in a corporate finance sense.
Well, I think that was my point, is like when you're a 10 million market cap with no cash behind you, or very little cash behind you, certainly not enough to make acquisitions, the seller will rank you by his thoughts on whether you're likely to be able to raise capital or not. So you may be able to go and have conversations, but how seriously people take it, and I've been there myself, I've been in the rooms, if you're sitting there with access to hundreds of millions of bucks, they're all ears, right? right now, and where I was getting to was, you've got some big names on there who aren't necessarily day to day. You're running the company, but did they allow you to have conversations a £10 million company wouldn't be able to have?
Yeah, absolutely. I mean, I think the target assets we are looking at, first of all, they are universally debt financeable, number one. Because of the nature of them. So we're looking at production assets that are generating free cash flow by and large, and they've been in existence for many, many years. There's a cadre of banks in Southeast Asia that are very happy to lend to oil and gas companies, and have lent to either these particular assets or these style of assets are known to them. So the vast majority of any financing can be taken care of that way. There is always going to be an equity component. Now, our challenge is going to be, how do we manage that? Because, we don't want to turn around to shareholders and say, just give me the money, because chances are most of our shareholders don't have it. So we have to find a way of dealing with that equity component in a creative way. Maybe I can just mention something which is in the public domain that we have looked at by way of example, which was Ophir itself. This is pre-Nick's involvement with Coro. Last year, when it was being sold to Medco for cash. And actually, there's a high quality asset base that I knew very well. A lot of my old Salamander assets were there. And we felt, actually, Medco were getting a steal here. They're walking away with it. And we were approached by a number of Ophir shareholders to see, could you offer us an alternative? Now, Ophir had so much cash on the balance sheet. We also had a line of credit from a large financial institution, who I probably shouldn't name, but anyway, a bank everyone would recognize. And we offered them stock, and we put a credible stock and cash offer to the board of Ophir, and we were down to the last two. It was us or just an all-out cash bid from Medco. Now, ultimately, they had to raise their offer and we lost it. But that sort of deal would have seen Coro catapulted into a 20,000 barrel a day producer, generating free cash flow, paying dividends, big capital return to shareholders straight off the bat. It puts our equity owners in a very, very different place. You suddenly go from nothing into the major league.
Yeah, but again, it comes to my point here, which is I want you to help people, retail audience, investors, understand the difficulty of doing business, because an all-cash offer is always going to sit ahead of a cash and shares offer. In my humble experience in the past, okay, and any producing assets are also, which can be mostly financed by debt, it's going to be in a highly competitive environment. So again, what are the things that you have in place, your contacts, your experience, your know-how, which is going to allow you to genuinely compete going forward? Because we're going to talk eventually here about an M&A component to what you're doing. You've mentioned it at the beginning, and I do want to get into it. So what are the things that you've got that allows you to genuinely compete? Not talk about it or nearly do it, but actually get it over the line.
I think maybe I could challenge that. And I think part of the changing dynamic in Southeast Asia is that, yes, it has been competitive historically, but actually the dynamic at the moment is that there is a wall of selling going on. Okay. So now there is a limited number of buyers.
Why is the selling happening, first of all? Let's deal with that.
Well, first of all, let's just establish it's going on. So if you look at the players in Malaysia, now I'll talk about Malaysia because that's somewhere I'm particularly interested in, and it's quite a good laboratory to look at because actually the Malaysians have been, the barriers to entry have been quite high in that country. So you don't have a long tail of small independents running around. In fact, you've got almost zero. The players that are there are big IOCs, big international companies and majors and national companies. And of those, right now, on the market, Hess is selling out, Exxon is selling out, Repsol's about to come to the market, Petrofac are selling out. Who's going to buy all those assets? Now, the reason they're selling is twofold. One is Southeast Asia is predominantly viewed as non-core to a large North American or a major. To some, it is core. I'd say to Shell, it's part of their DNA. Southeast Asia, definitely. So I wouldn't expect them to be a big seller. I think they'll trim their portfolio, but not, withdraw wholesale. So not being viewed as non-core, number one. And number two, this whole greenhouse gas emissions saga. And now Asia is a gassy province. A lot of these assets are big gas producers, and some of it has some CO2 associated with it. And for these larger companies, they can make an impact on their corporate numbers by withdrawing from some of these countries straight off the bat. And then all of them, you will have seen, and your viewers, listeners, followers will have seen very large statements being made by a lot of the majors about cutting these numbers for the years 2030, 2050, even for the next year. They're all of them behaving in the same way. Actually, I think that could end in tears, because when you see the whole of the industry going down a certain path, you've got to wonder, it never normally ends well. That's not my problem. Actually, I think that is a source of opportunity for the independent sector, because we don't have the same scrutiny, and we can take some of these assets and improve those CO2 emissions standards, for example. In fact, you can get financing where you get better terms by reducing things like CO2 emissions. So we can take it, clean it up, make it better. But these are high quality assets, make no mistake. This isn't a ragtag, tail of the portfolio stuff. These are meaty core assets. For us, they'll be very, very core. Now, there are very few buyers right now, mainly because there's no capital around. But when you look at the people who have been buying, they're going to get full pretty damn soon. And with the number, every week right now, I'm hearing about another portfolio coming to the market. Now, in the North Sea, let's draw a parallel with that, where people might have a lot more familiarity. We have seen a very active, liquid M&A asset market. So there's lots and lots of deals going on in the North Sea constantly. And the people who have benefited from that have been the independents themselves, backed by private equity in some cases not. But we've seen some imaginative, creative deals being done. For example, Serica. You see Rockrose, Diversified in the States, Jadestone in Southeast Asia. These have been some of the best performing E&P stocks in the market, and they're acquirers of assets.
Well, tell us something about these types of deals that you would consider. Again, we're going to keep it fairly generic here, because unless you want to tell us about specifics. Again, going back to my experience, when people are offloading portfolios, you're going to get some good stuff and you're going to get some not so good stuff, because that's the way they bundle these things up. I've been involved in deals like that myself, where you don't necessarily want some of the assets, but you've got to have to take them and the liabilities that are associated with it. So are you looking at large portfolio type structures, or are you talking about looking more specific at individual fallow fields, as you described them earlier? I mean, what's your go-to or preferred option?
To be honest with you, we're looking at all of that, all of the above. I'd say the fallow fields are really sitting in the regulators' hands. So we deal direct on license rounds, or just to get those awarded from the government effectively. So we're not out looking to write checks and bid for them, with counterparties. That isn't that game. In terms of assets and M&A, we look at portfolios and we look at individual assets. To be honest, it would be much easier to start with a one-off transaction, just a single asset, to get you a major step, but that positions you then really to go and get the big portfolio. So we have quite big ambitions in that regard. Yes, it's a challenge to go from nothing to very large. It can be done. I'm not saying we can't do it. I think we can, but there are easier steps you can take. So we look at all of above.
Okay. So, and again, I just want to finishing off the macro component. Southeast Asia, you've got lots of jurisdictions and lots of regulation there. I mean, what would you say the big red flags are, which can work for and against you, in the sense that if how to way around the system, how to navigate the system, it can work in your favor. It can be a barrier to entry for others coming in, which works to your favor, right? But what are the big things that investors should be listening out for when companies like yourself are talking about investing in Southeast Asia, or in the oil and gas area, of course?
I think there are a number of things that are vitally important. I mean, clearly, number one, I always look at is the rocks. If the rocks aren't working for you, you're going to lose this game. So we need something where we can believe. And in fact, a lot of what we talk about when we look at our current asset base is around things where we see, gas lighting up the seismic, for example, where we see things that have already been drilled and appraised. That reduces your risk enormously. So, and once you've worked Southeast Asia for a while, you kind of know the basins that have the style of asset that's going to suit you. So we're not coming. I mean, there's so many basins in Southeast Asia. There are certain basins I just rule out straight away. I just don't want to go there. And part of that is because the second big thing that you need to look out for are your partners. And this is something that if you're new to the region, it takes you a long time to work it out. But we already know who we'd like to partner and who we don't want to partner with. It sounds awful to say it, but there's a lot of names where we just go, stop, don't. It doesn't matter how attractive the thing looks, we're just not doing it because we know there's a strong chance that's going to lead you down a path which isn't about making money from oil and gas.
And these partners, these are strategic partners with money, or these are strategic partners who are on the ground helping you around the regulatory, licensing, permitting issues?
When I say partners, I mean people who might own an asset today who would like you to come and help work with them, and that's really not going to work. If you see something that's very attractive in that regard, the best thing to do is to get the partner out. So you construct a deal whereby they're gone, and yes, you can control the asset. But I think partners can bring everyone. I mean, they can bring a partner, they can bring a project to grind it to a halt. I think in terms of the regulatory issue, I mean, again, I think knowing, we know very well what the Indonesians expect. We know what the Malaysians expect. We know what the Vietnamese expect. We know what they expect from us, and we know what to expect from them. I know, the timeframes they're going to react to. I know which sort of approvals they're going to need. And so we're not surprised by things. But I think in terms of control, trying to learn all that is, it takes time and freak people out.
Okay. What happened at Bulu?
Yeah. Well, two things happened. One is the time to get the regulatory approvals taking a long time. Not a surprise. I'll tell you why. On that deal, we were stepping into a transaction which someone else had been trying to do for a couple of years. They couldn't complete it because they couldn't raise the money. We had the money. So we went to the Indonesians and the counterpart and said, look, why don't we, and the party that was trying to do the deal, and got the three of them in the room and said, look, why don't we do this? We will step in and do that deal. We'll deal with the party who can't complete it. And you, seller, will be able to complete the deal with us. So we had to unwind something that was already in place, number one. So we had to undo all that. Then we had to bring Coro in as an investor in Indonesia, and then we had to put Coro on the license. So we knew it was going to take a long time. And I think that although it was going to take a long time, that was on its way to happening. And so I don't think that would have been a problem, to be honest. It just takes time.
And does it retain any value for you today in terms of, do you think you're getting value for that on the books?
No, we've gone past the long stop date twice now, and we said, okay, well, the long stop date you can walk away. So this is just, we're no longer obliged to complete this transaction. What actually changed for us was not that. It was not to do with the regulatory issue. That was fine. It was not to do with the rocks. They were fine. We're very happy with the field. Very happy with the gas market in East Indonesia, but we were getting into another appraisal development project, and we have one in the West of Tuna, which, to be honest, we prefer. I think it's going to move quicker. But really, the big thing was the partner, coming back to that again, was Crux Energy. Crux Energy is the operator of Bulu, and it's no secret. If you go to Crux Energy's website, you'll see that they are, effectively in Chapter 11, they're fending off creditors. They're looking to restructure their portfolio. Everything's up for sale. I think their ability to move the project forward as Crux Energy is zero right now. And if they sell Bulu to someone else, we don't know where that's going to go. And I've just made the comment that, partners are your number 2 risk, but it's up there. And if it ends up in the hands of someone we don't really want to be with, what are we going to do?
Okay, so very, very frustrating process for you, I'm sure, to have gone that far down the line, and then.
I think we could have continued with it. It wasn't. We chose to walk, and I think it's the best thing for shareholders because once we announced that deal, we then got into the West of Tuna deal, which we infinitely prefer. Yeah. I'd rather put $100 into that than into Bulu, to be honest with you.
Okay, and just so while we're on the subject of just I want to park some stuff so I can actually focus on the assets that you've got. So Italy, you've again consciously decided to walk away from Italy. You've got this Po Valley assets. The Italians not loving oil and gas as much as they used to. You've walked away, and I guess that's got no value on. Well, you said you're selling it, but is there real value in that? Are you going to make any money?
Yeah. I think it can make money. You have to invest into it though. And
are you going to?
Well, we aren't, no. But I think someone who wanted to grow a business in Europe could do, yes.
Oh no, I'm talking about you. So there's no value for you. No.
Probably like if you discovered a big oil field in your back garden, has it got value for you? Yes, but are you going to develop it? No. So you would say, I've got an asset. It's an oil field in my backyard. But it's the same for us in Italy. Let
me ask another way. Are you going to sell it? Are you going to make any money when you sell it? And are you walking away, or are you going to retain some kind of interest?
I think yes to all of those apart from the retained interest. No. I mean, we are going to retain an interest in the company that's buying it, because I think there's some kickers coming down the road. But
what's that worth to you then?
Oh, very little. I mean, we're in our mind, mentally, we don't assign any great value to it. I mean, I don't think it's going to change Coro's fortunes, put it that way.
Right, and you're also equally not going to be distracted by it. So it may or may not generate some cash for shareholders, but with the company, and then value for shareholders, but unlikely.
Correct. I don't think it's going to change shareholders' lives.
Okay, got it.
I think through our other activities.
Okay, well, I just wanted to clarify that and also park that. So Bulu, how much money did you spend, getting Bulu through to the stage where you decided to walk away?
About 200K. So, I mean, it was actually, we looked at it as an option. We had an option for 1.5 years, something like that.
So 200,000 in total.
Yeah, no, it's some lawyers' fees. That's all we spent. We haven't actually spent any money.
Well, G&A presumably, and time and salaries and all of that kind of good stuff, right?
Yeah, I think the total quantum we calculated was about 250,000. I mean, it's really lawyers' fees. In terms of G&A, we have a very small team here, as I say, which we pay for regardless. But really, it was going through a paper trail with the regulators, so we weren't actually ascribing time to it particularly.
Okay, so let's talk about what you do have today, where you are being assigned value. You've got Mako. Why don't you tell us a little bit about that?
I would love to tell you about Mako. This is a project, to be honest, coming back to when I first arrived in Coro, and I was talking to the board about strategy, this was my number one target. I like this area. I think the Western area is a great basin for independents like Coro. It's a very prolific basin for oil and gas. It supplies Indonesia. It supplies Singapore. There's changeover in asset ownership going on. And what I like about this project is it's an unusual asset. It's biogenic gas. It's shallow, so it's only 500 meters below the mud, below the mudline. But it's aerially huge, about 3 square kilometers, or it's just an enormous area. And I felt here where is an area where an independent can come in, take a slightly different view to conventional oil and gas company, and end up with a substantial gas resource very close to the Singapore market. And the Conrad, who's the operator of that block, had done a great job in drilling the Mako well. And this demonstrated high quality gas, deliverable reservoir. They cored it, they flow tested it. It all was starting to look like this could be what I thought it could be. And so we came in and partially funded the two-well program. We put $10.5 million to work there, and used a bit of our equity to as part of consideration, which valued the whole project on a gross basis at about $91 million. So that's the value we ascribe to it. And in paying for it, we're actually going to do some drilling. So we're not writing a check and letting them wander off. We're going to fund work. And we drilled 2 wells. And if I can call the Mako South the discovery well, which is the one Conrad drilled, they had about 7.5 meters of reservoir sand. They flowed gas well. The first well we drilled found 10 meters of the same sand, same gas water contact, same pressure cell, in communication. As far as we can see, it's all one contained unit. And it was something like I want to say 13-kilometer step out, but it's a long step out. It's huge. We then drilled the Tambak 1 well, which is the third well after Mako South, Tambak 2, then Tambak 1, and that one I think found about 25 meters of sand. It also found the gas water contact in that sand, which is good, because at the moment, otherwise we were looking at inferring a gas down to, water up to, and sort of telling you where the gas water contact was. But we actually have it. We have it in the reservoir, and that we flow tested it, flowed 11.4 million a day on test. Lovely clean reservoir sands, excellent permeabilities and porosities. So really pleased with the results of the drilling. We felt at the time that the pre-drill 2C resource number by Gaffney Kleins on an independent basis is about 276 BCF and about 395, I want to say, in the 3C, the upside case. We felt that the drilling was highlighting the upside case here, that was going to be more likely a resource number. So we see approximately 100 BCF of resource adds as a result of this. What we've been doing since those wells were drilled is reworking the data to integrate the new well data. Operators been doing that. When they've completed their work, which they're about doing now, Gaffney Kleins are going to revisit their CPR, and we're going to get a new certified resource figures out of them.
Okay, so you're excited technically about it. Can I just come back to how you're intending, or how you have structured, or how have you agreed to structure this deal? Are you buying into asset level? Are you buying into the operator company? Are there shares? Is it cash? Because as we've talked about, cash is at a premium at the moment.
Yes, cash is a premium. Well, as I say, we structured the deal as effectively a farm into it, and we were preferentially paying. So we paid $10.5 million towards the drilling of those two wells, and then we're only getting 15% of the project, by the way, or the block. And of course, then we're paying our way of 50 above and beyond that 10.5. We're paying 50% of everything. So sort of on a heads-up basis. The deal was structured such that we would like to have Coro own equity directly in the production sharing contract on the block. So we would see Conrad, Empyrean as the other partner, and Coro all directly owning interest. That's where we're going with it.
Okay, fantastic. And sorry, can I just say, you paid $10.5 million cash. How much cash have you raised to date?
We raised a Euro bond for about 22.5 million euros. That was funding. And then we had about, sorry to mix up the currencies, about 14 million quid on admission with at 4.58p a share.
Okay, how much have you got left?
Well, the last reported numbers were about $11.5 million as at mid-year 2019.
How much have you got left, though?
We're down to about six to seven, I would say, by the year end. We're going to come out with either year-end numbers quite soon. But we're funded for the foreseeable future, I think, is the important point for that. And we've been through the drilling program. Just to come back to how this deal will end up, because I think you were asking about the company, are we buying to the company, the license, da-da-da-da. And there is a related point to the approvals that on Bulu, I was telling you that it took a long time with the regulator. We went through 2 long stop dates. We know it can take a long time with the regulator. We don't think that Doyoung or this deal is going to take as long as Bulu did. But there's a certain amount that's outside our control. So if for some reason that doesn't happen, we've spent. So you're going to say you've just given them $10.5 million. You haven't been approved. My God, you've lost everything. No. So if that is the case, then your safety net is that you end up with 15% of the operating company. So we will still have our 15% interest. It'll just be held through something that's jointly owned by all the partners rather than direct. But what we would prefer is to go direct.
Great. Okay. So 2 questions there. I mean, if you end up with 15% of the operating company, given the perilous state of the market, you're telling me, how do you know that's going to be worth anything, in the near future? I mean, what security are they able to give you?
Well, it'll own 100% of the asset. So,
but if the asset's not producing anything, then that doesn't count for anything. So in that scenario,
I think it's quite a valuable asset. I mean, we get it independently valued as well. The Gatwick clients, for example, value it too. We valued it publicly, and once we have the new CPR, of course, the next thing we'll be doing is going to get the gas sales agreement sorted out. So at the moment, there's a heads of agreement with a gas buyer in Singapore. To get the best gas price, you want to market the biggest volume. So by upscaling the volumes that are available to market, you're going to improve your gas price. Now, Singapore is the best gas market in Southeast Asia.
Okay. Now, I was just talking about the what if scenario. You said, what if it didn't get in production? We'd end up with 15% of the operating business. And in that context, what security is there for you if this field isn't producing? It may be on paper worth something, but if no one's going to buy it.
Can I just say, that doesn't matter how we hold it. If you think it's going to be worth nothing, it doesn't matter if we direct or hold it through the operating company. It's worth nothing. So how we hold it doesn't change that risk. We don't believe that, and in fact, we walked away from Bulu because we think this one will go quicker. And the reason we believe it'll go quicker is because it's a Singaporean gas market, which is high value, high demand.
Okay.
You have a gas sales agreement with Singaporeans, the banks will be falling over themselves to help to fund you. It's a cheap development. It's a simple tie-in. It's a good quality gas. I think, and I know actually from the small Southeast Asian oil patch that I am part of, for good or bad, this is an asset that everyone in that region is picking up and taking notice of.
Right.
We know it has value.
Okay, well that's great, but I'm just trying to get into the heart of it to help the viewers of this program, subscribers to this channel, to understand the numbers and where the confidence that you have comes from. Okay, so you've raised $22.5 million. You got $14.5 million when you originally came to market. That's a lot of money. You've got $6 million today. You've had a couple of projects which you worked on but have no value as according to you. Well, Italy and Bulu, you're saying have no value. You said that.
Bulu hasn't, because we walked away from it. Italy has value, but I don't think it's going to turn into something that's going to be a 10-bagger. It won't. It has value. It's been generating cash flow for us, and
give me a number. Give me a number. What do you think it's worth?
At the moment, it's doing about 1.5 million scuffs a day of quite of high priced gas. So as we speak, it's doing reasonably well. But our future isn't about that. That if we're not going to be investing into Italy. So it's
I know that. I'm just trying to. That's where I'm heading, is to say you've got $10.5 million which you're going to commit to Mako because you believe in it. It could get to market quicker, which is great. Today you're at £10 million, 9.5, 10 million pounds market cap. Obviously that's significantly less than the cash that's gone into the business, but therein lies the nature of the business you're in. So and at the same time, the share price over the last 3 years is down 70 odd %. It's you presided over a period of a tough market, but also a dropping share price. So I want you to help me and anyone listening to this. Where's the confidence come from that you think Mako is going to be the making of the business?
Well, I think Mako could be a company maker. We, in terms of value, it's roughly speaking, these things are just shy of $1 million per BCF when it comes to resources. That's if you do MP, and I'm sure our broker will have something that will be in that line. That's sort of how we see it. So if you have a 400 BCF field, gross terms, that an NPV 10, which no one's going to be buying, but that's going to be a $400 million asset. Let's say you sell it in the market tomorrow and you get half of that would be reasonable. That's double what we paid. So this is a hard asset. It's got hard value. We've just made it look more attractive from a commercial point of view, and we're beginning the gas sales agreement. So we're de-risking the thing as we go. We're going to go for FID on it. However, we only have 15%. Now, my great regret over Mako is I could not get more of it. I wanted at least 40.
Okay, so you like it. You like the asset, which is fantastic. Help again your shareholders who are much underwater understand the timing of when you think this thing starts looking like it's going to get into production, because that helps sentiment, and when you think it's going to start actually generating cash, which will definitely help sentiment.
Oh yeah. But I mean, this is something that we've just drilled the appraisal wells on. Frankly, I mean, we have a POD. So the milestones to look out for: independent CPR from Gaffney Klein. That should be coming probably the end of this quarter. The gas sales agreement, which they'll be once they have that CPR in their hands, they'll be able to go out marketing that and get that finalised with the buyer.
This year?
Yeah, definitely this year. Probably in the third quarter, I'd say, maybe mid-year, third quarter. And then you're going to go for FID. You're going to have your plan of development revised with the Indonesians, but I think that's a relatively, I wouldn't say trivial matter, but it's a sort of routine matter. And then you're going for FID. And I think you'll find that the banks will be chasing us to help us out on this one. So I would go PA on asset, absolutely. I mean, it's the sort of asset that is going to fly in Southeast Asia. They'll be in hot demand. So I have no qualms about that asset. Nothing around that keeps me awake at night.
Are you buying shares today?
I have been buying a lot of shares, and I think if I'm allowed to, I think this is a good time to buy for definite. Yeah.
Okay.
Secondly, moving on from, but the other things that could really move the needle for shareholders, though, of course, is Malaysia, and we have a bit of an outlier strategically. I talked to you about the strategy and the game plan. This block doesn't fit that at all, and I think we kind of have to admit it. We got into it because Petronas asked us to do it. So we were there in KL, and we kept going back and said, "Look, would you have a look at this acreage for us and do a study?" Which we did, and we showed them the results, and then they got excited about it. And I think converting that into a license for us is going to be a big step forward. It's not that hub strategy that I talked about. It's out with that. But at the same time, I think we can get value from that. So we can bring in partners, we can market that. It's got a very, very, very large prospect on it.
So what was the nature of that relationship with Petronas? Was they brought you in as a consultant to see what you could do for them, or they as a partner?
Yeah, I mean, we would end up as a partner with them on the license. They would be a de facto partner of ours.
Was
We're
that
not a consultant of them.
Was that original basis of the conversation, saying, "Look, have a look at this. We can't work it out"?
What we've been doing is going to them and looking at their license rounds and saying, which areas do we like, and we're looking at applying for certain blocks in license rounds. And as we were doing that and waiting for those processes to start, because they have to fire a starting pistol before they can do anything, they said, "Look, in the meantime, why don't you have a look at this block?" So it was their suggestion for us. We were very happy to do it, and when we saw it, we got very excited. So we've got numerous prospects. There's one very, very, very large prospect which you just cannot, you can't kill, you can't shrink it. It's however you cut it, it's enormous. And we know there's gas chimneys on the seismic, and Petronas, as a result of us showing them this, were acquiring a seafloor geochemical survey in the area, and they adapted their program to cover this prospect. And we got the results of that not long ago. And we have methane in the seafloor over the prospect itself. So we can see on the seismic gas coming out of this structure, and methane's in the seafloor above it. So we are coming back to the rocks, we're very confident that this is gas charged. There are other technical risks associated with it, but you rarely see something of this scale that has those kind of indicators around it. And I think in the industry, the wider industry, this is an attractive drilling candidate. Now, I've told you earlier that going wildcatting in the middle of nowhere is a losing streak for independents. So what I do not want to do is put CORO'S money into drilling that. No matter how much I love it, and this is where people often go wrong in this industry, they fall in love with their prospect.
Well, there you go. That's what I was going to ask you, because again, I have invested in the region, and I do know one or two stats, but with regards to drilling success. So what's your view on these things? Obviously, smaller fields are going to perhaps not have as higher success rate as large fields that you described, but how are you going to fund something like that? I know it's early stage, it's Petronas, are they going to be funding this and you're going to run it technically? Are you going to put any cash towards this? I mean, how should shareholders feel about the conversations you're having in Malaysia?
Well, there's basically three strands to it. One is that one about Block 2A, which we would like to convert to PSC. Just one thing that's holding us up on that happening is it's offshore Sarawak. Sarawak is where the Bintulu LNG plant is located. And the Sarawakians are saying, look, we want more of the economic rent from the oil and gas industry in Malaysia going to Sarawak rather than elsewhere. So there's been a dialogue, let's say, going on between the government and the Sarawak state about that. And we're waiting for that to resolve itself before they can sign any new blocks in Sarawak. In fact, if you look at any of the license round stuff in Malaysia, there's nothing in Sarawak coming up. Once that resolved, I think we'll be then free and clear to sign the 2A PSC. So there's that conversation out with our strategy, but something that we want to go for. The second thing is about license rounds. So they have discovered fields that they are offering to the industry in a process, and that process will run for six to 8 months, but you can apply for them. And this is the greenfield, fallow field that you don't write checks for, you undertake to do work program. So we could be receiving these small fields to be worked on. Some of them have production on them too, from the state. But you have to convince Petronas that you are the right people to pick this up, that you're going to devote time and energy and love it and all the rest. And having been in Southeast Asia for so long and in Malaysia with Salamander and even with Lasmo, actually, when I was a young whippersnapper, I did lots with those guys. That's where they do know you. That does help when you come.
With whose money? Whose money are you using?
Well, that doesn't cost anything until you actually start drilling wells on it. You are literally just paying. Okay, you're paying someone's salary, but it's not something whereby you're writing checks.
Right.
The third thing is looking for transactions, M&A transactions from other counterparties in those countries. If you were to pull off one of those, yes, you would be having to write checks, absolutely. And that's where you have to get creative around structuring. So they're really the three conversations. We want to make sure that Petronas are comfortable with us as an investor into Malaysia, as a partner for things like 2A, and also as a counterparty to look at things that people withdrawing from Malaysia, or the Indonesians in Indonesia, are comfortable that Coro are going to be the right sort of people to own these assets once these other countries have gone.
Okay, but your number one focus is what? Mako, Malaysia is on the side.
The M&A angle. I think we don't operate Mako. Conrad operate that, and they're doing a great job. Obviously we're looking at what they're doing and helping where we can, but I don't want to get in their face and in their way. They're very, very capable. Coming back to partners, I'm very happy with Conrad as a partner. Okay,
no, my point is your number one priority is to get that deal over the line and working.
Yes. Correct. Oh, okay. Mako. Yeah, is it my number one priority? I think the number one priority is going to change the lives of Coro shareholders, is going to be Coro getting on the end of a sizable production-based deal. That is going to change our world. That's my number one priority. Mako is great. I love it, but it doesn't need us every 8 hours a day worrying about Mako. It just doesn't require it.
What are you doing for 8 hours a day at the moment?
Well, as you know, I'm over in Southeast Asia quite a lot. It's a reasonably big patch to cover. I feel that you need to understand the dynamics of what's happening there. And I think if I wake up in the morning and read a headline about a transaction in Saudi Arabia I knew nothing about, I am depressed as hell. That is a massive failure. So you need to be in a position where you know what's going on in the market, you know who's buying what, you know who's selling what, and you know where you want yourself to be. And that is the most important thing. when you're there, it's actually getting on the other side of the counterparty, being the counterparty to the right deal.
Where are you based?
Generally between London and KL and Singapore.
How do you split your time?
It varies through the year, but I'm probably a little more time in London than the other locations, but I'm out there frequently. People in Singapore seem to think I live there. People in London seem to think I live here. So, you must be getting something right.
Okay. Can you just it's a small one because I couldn't quite work it out. Who and what is C4 Energy in relation to the business?
Yeah, no. It doesn't have any relation to Congo. I think it's a James and Marco deal, but I don't know. I mean, you have to ask them.
Nothing to do with Coro. Okay, interesting. Thanks. And then I've got to finish with this one because you said it, and I was like, what does he mean? Commodity price isn't an issue in relation to what we're doing. So, what does that mean?
Yeah. It means that if you look at the production sharing contract system in these countries, this oil price is absolutely fine. It'll work. And equally for gas, gas tends to be for local markets. The price tends to vary depending on demand. But I'm not sitting here today worried, thinking I need the oil price to go up, otherwise I can't do anything. The oil price is fine. I'm very happy with it. It could be a problem. It's not anymore.
Right. Okay. Look, James, thanks very much. Good introduction to the business. I know a little bit about it. I've put a bit of money into that part of the world, oil and gas, hunting it offshore, like you guys are, not necessarily successfully in all cases. So look, do stay in touch with us. Let us know how you get on. You've got a few things going on there. It's early days. I say the market has been interesting for the past 2-3 years, certainly in terms of the financing side of things. I'm not quite sure when it will pick up. I'm not sure any of us do. We shall see.
I think let's not rely on the market for a pickup in Coro. I don't want to it's got to float all boats and we'll just go up as everyone else is. I think we can do things to differentiate ourselves and get deals over the line. Well, we need to look very different quite soon, which is what I'm working towards.
Well, that's a great point actually. Because again, we've heard a few small management teams come through asking us for money to do deals in Southeast Asia, offshore, shallow offshore stuff. But there's a lot of guys out there hunting for cash. What do you think they will be successful? I know you outlined at the beginning why you thought you were unique, but
it's a massive problem. So to be honest, it needs them. Because the turnover and the ownership of the assets is going to be so dramatic, and I don't think the governments have kind of latched onto this quite yet, but they are going to have to deal. They're not going to deal with Exxon anymore. They're going to have to deal with someone else, and they have to get used to the idea that people like Coro and our peers are going to be their next wave of the industry, and the sooner they kind of manage that, they should manage that transition such they're in control of it. If they don't, it will be like the Wild West again. But I'd like to see capital come back. And I think there are some really good management teams out there. They're sensible guys. And I think, as stewards of the next wave of Southeast Asia's industry, they'll be great. So I think, I want everyone to succeed at it. And as you say, there are a lot of people around and they've got some great ideas. And I think, we could definitely see a rejuvenation of that sector.
Well, let's see what happens. Thanks again for your time. Stay in touch and we'll speak to you soon.
Thanks very much. Appreciate it.